In the next few minutes, you guys are going to learn how this one simple rule will boost your trading consistency. Not only that, but I will show you practical examples of what I have just stated using the following price action in front of you on every NZD. It's something that not many people understand, but today through this video, I will make it clear for you and eventually help you to get one step ahead with your trading consistency. So buckle up guys, because it's going to be mind-blowing. And before you get into it, let me roll the intro with disclaimer for just a few seconds. I know I'm sorry, but I have to do that because I have to make you guys aware that everything shared in this channel is just for educational purposes. It's not financial advice. So I want you guys to be fully aware of it. So I'll see you in a bit. So let's start, first of all, understanding what is going on currently on the price structure and the price action and what the market is telling us. So you guys can clearly see that for a bit of time, we had price from this low, making all the way a high above here. So we had a specific range that is telling us that the market is going to the upside. Now, I'm not going further to the left because I'm not here to break you down the pair itself, but I want to speak about this specific price action over here to help you understand this rule. So what's going on is that when price started melting to the downside, right? You can clearly see that as soon as price, okay, one second, let me put reply mode over here so I can show you better. All right, so as soon as price came to this demand zone and it tapped to the extreme, so somewhere around here, it started showing some intentions of price going to the upside. So what do I mean is that, just one second, bear with me, here you go. All right, so check this out. Price went a little down, right? It took all this liquidity out and then it showed intentions of going to the upside. So in this case, you know the price is sitting somewhere to the right hand side. So basically somewhere in this demand zone. So this extreme point of the huge range that I just shared with you. And what actually happened is that price changed the momentum. So if you are a structured trader or chalk trader or boss trader, whatever you want to define yourself, you would have definitely looked for a trade all the way down here, right? So you'll be like, okay, let me take the extreme. So you will have definitely taken the extreme, and guess what happened? You will have definitely hit a stop loss over here because price did not respect that zone. So let's say we have one stop loss that we just got ourselves. One second, all right, over here. So that's our one stop. Now that you had a one stop, what actually happened is that you see price breaking all the way down here, and it violates this level over here. Check this out. So it goes beyond this level, so it breaks to the downside. So now it's telling you the intention of the price is no longer to go to the upside, but the intention is to go to the downside. So again, if you were to follow the order flow, what do you think that will happen over here? Check this out. So you have this high that made this low, then you have another high that made another low, and now that you have taken a loss over here and you've seen the price has changed the momentum, obviously based on the technical point of view, the thing that you can see on the chart, you would have said to yourself, okay, you know what, I'm going for a sell. But check this out. If you would have taken the sell right now over here, again, the same thing, you would have been stopped out. Why? Because price did not respect the structure, right? It just broke to the upside. So obviously at this point, you will be saying, okay, you know what? Maybe price took out the liquidity here, or false breakout, maybe false breakout here. Maybe this is the truth one, like the real one. And then again, you keep doing the same thing. And look what is going on over here. You got another stop loss. So isn't that crazy? So now at this point, I'm pretty sure right now, people, you guys that are watching this video, I'm pretty sure that 50% of you guys, by now, hitting 3 losses in a row, you will be already freaking out because you will be thinking, okay, something's wrong with me, something's wrong with my strategy, something's wrong with my approach. You know what? Let me change my strategy. Let me change my approach. Let me change whatever. Because then the worst thing gets even later. Why? Because if you keep following the order flow and then at one point you see price shifting the momentum over here again, obviously taking consideration of what's going on to the left, but let's say just going within the structure, you can clearly see that we have another change of momentum, right? So if I put this better, all right, you can see that we have high, low, we have a shift of momentum, bam, there we go. That's going to be your fourth stop loss. Like literally, this one here would have taken out anybody because of this weight. So now, at this point, just be realistic. How many of you that are watching this video will be very pissed off with yourself, with your trading plan, with your strategy, and will be feeling like, oh, you're miserable, or maybe it's time to change your plan. Maybe what you're doing is not right because you're not learning. Like, how on earth is it possible that you're just following all your plan, all your strategy, all your structure, and even though you just keep hitting losses? Because look, we had one stop loss over here, we had a one stop loss over here, another one over here, so it's the third one, and this is the fourth one. All right, cool. So what do we do now? What do I do? What do you do, guys? And how will you approach that? How will you deal with it, right? That's the most important question. And let me tell you something, and unfortunately, this is something that took me so long to understand, because cases like this will always happen on the chart, right? You will always have situations where you're gonna have these type of losses in a row. And it's even worse if you have like multiple pairs where you just start accumulating all the losses in a row. So imagine having two pairs where both of the pairs is giving you like 4 losses. You will be down minus 8% right now. But the thing is this, right? This is the moment where 90% of the trader give up, or they switch or jump to another strategy. But let me show you now what exactly happened afterwards. And that's the thing that you guys have to understand. Those are the things that you guys have to realize in order for you to understand how to reach your peak on your consistency, how to reach the consistency, and what is the most important things in order for you to get that consistency. Check this out. So if we were to follow the same exact rule that we did so far, which was following the structure, going with the order flow and everything, let me show you what would have happened the week after you had this bad week with all these 4 losses. So check this out. Price breaks one more time to the upside and you don't get anything. Why? Because price doesn't retrace all the way here. It came in the middle. Okay, if you trade from the 50 level, from Fibonacci, then you can take that, whatever. But check this out. Price comes here, right? Breaks again to the upside. Exactly the same thing that we did so far, right? Check this out. What happened over here? Well, you can now go for long. Why? Because you know that price has broken to the left side in a higher time frame. We broke again internally, and most likely now what we're doing is just like going to retrace. Oh, sorry, one second, guys. All right. So we are going to retrace for this huge drop to the downside, right? So what happened is that now that we are here and the price broke to the upside, you could have done the same exact thing that you did so far in all these previous trades that you have taken. And let me show you, I'm not going any crazy risk to reward or whatsoever. I'm just showing you literally the bare minimum, which is the basic. So even if you, let's say, were to take basic, let's say 1 to 4 or even 1 to 3, check this out. That itself was already a trade of 1 to 3. Okay. And then again, check this out. Price break the structure to the upside. And guess what? We got another setup. We keep doing the same exact thing. So check this out. You take the trade and again, another setup for beautiful, another 1 to 4. I said 1 to 4, 1 to 3, but look, you can already see that. And now this one, you might be wondering, okay, why is this start trade over here? Actually, that's a trade that I've taken myself for a nice 1 to 10. You can see the screenshot over here, just on the left corner. And you can see that unfortunately, I couldn't hit TP because price came nearby, like for 2 times. It missed my entry, and then it just, sorry, my TP, and then, yeah, just run away to the other side. So yeah, I hit a break even. Unfortunately, that happens as well, or it wasn't a loss, so I'm happy for that. But anyway, the most important thing that I want you to guys understand from this part of the video is that why I'm sharing with you guys this is because the only rule, actually the most important rule, is always sticking to your plan and to your approach. Now, we broke down this side of the price action together, right? So we just followed the order flow, price action, nothing else. And you see that following that, we had like in a row 4 losses. But then eventually, just sticking to the same protocol, same rule, same understanding, and same of everything, we managed ourselves taking 1 trade for a 1 to 3, 1 trade for a 1 to 4. I wouldn't even count this as a 1 to 10 because that's my personal way of trading it. But if you were to take that, you could have taken that as well. So you could have done again another 1 to 5. So pretty much with 1 trade out of these 3 trades that I'm sharing over here, you could have easily been able to recover all the losses to your left. I don't know if you guys understand how powerful is that or how important is that, okay? Because the thing is like, the only way for you to understand this, the only way for you to print that in your mind is when you start backtesting a lot, when you start doing data collection. Now, I know, am I going to have a lot of people saying, oh, I don't do backtesting, I do live testing, forward testing, whatsoever, which is beautiful. I absolutely respect that. I have nothing against, about people that are just doing live testing, not back testing, whatever. But for me, the way I see it is that, okay, it's cool. I can do live testing. I can collect a lot of data and, all this kind of stuff. But then if I don't also collect back test, like if I don't collect data from my back testing and visually, I don't see the same things happening over and over and over and again, how am I supposed to gain confidence when I'm trading on the live testing? Are you guys following on this one? Because look, eventually, okay, look, that's not even the end because now I just did this part. But check this out. When price broke again to the downside, guess what? We got another trade over here. I mean, you see how wild is that? It's just bloody crazy. Oh, sorry, 1 second. I need to remove the pen tools over here. Okay, let me remove that. So I think Aaron's video was the best, like the price action we had over the last 2 weeks, 3 weeks was the best one that I could have used for me to explain to you guys this, because this rule is very, very important. Like understanding how crucial it is to stick on your plan, on your strategy. Doesn't matter how many stop you get, doesn't matter how many, losses you get, but sticking to it is what makes the biggest difference on your consistency. And if you don't do that, you will always keep hopping from one strategy to another one. And trust me, I did that. Okay, I mean, I'm not hiding it. I did that myself. And I know I made a big mistake till one day I actually realized that no, I think that's where I'm going wrong. So you can see that now we had one trade here, 2, 3, 4 trade. Eventually, you could have taken even further. Like for example, here now, the price broke to the downside, then it started retracing. You could have looked for a sell, but it would have been a stop. Okay, that's beautiful. Now, for example, this one, okay, this is another piece of thing I want you guys to learn, which is something different than what I'm just explaining right now. But look, price broke to the upside. So it might be like, oh, now I have to go buy because it's bullish, whatever. Now here, I think you shouldn't be even going for a buy. You want to know why? Because yeah, it's beautiful that you always follow the price action, the order flow, the structure, but you have to always keep in mind of what's going on to the left as well. And this is something that a lot of people miss out as well. Like they don't look on the left. All they do is like sticking to a smaller time frame or to the right hand side. Now you guys already know that I told you initially, that's the reason why I have the purple line over here. The price broke to the downside, so it's a big range. So that means that we are in a higher time frame retracement. So if I know this information, the first question I should be asking myself is that when I see a break to the upside, where exactly am I aiming to go? Where is my objective? Okay, where is that I'm aiming and my final outcome for this price to see coming and then reversing? So eventually you can see the price, yes, is true. It broke the structure to the upside. But then eventually, by breaking to the upside, it already reached a very important supply zone. I'm not going in depth why this supply zone is important than this one whatsoever, because that's not the purpose of the video. I'll do another video about that. But right now, try to understand what I'm saying. Because in this case, okay, price broke to the upside. Should you go for a buy? Well, I personally wouldn't have gone. And actually, I wasn't even looking for a buy anywhere near that. I have taken this sell. Actually, I've taken this sell, but the thing is like then obviously you can see price went up again. So I hit another break even. But then the thing is like, when price came here, this point is something that you shouldn't be even looking for. And the only way I would have probably taken that, again, is always about reacting rather than predicting, is that if price would have come here and it would have broken all the way up here, then I would have taken the trade based on the retracement. That's it. But targeting all the above this high or even above this high. But right now, when I know the price in bigger picture broke the structure and we're in a retracement phase, I no longer look for any buy. And now I'm just going to be looking for sell. So I hope you guys understood this concept, this importance, like how crucial it is for you to stick to your role. And I know it is so difficult because when you hit so many losses together, trust me, I used to freak out. But for me nowadays, if I hit like 3, 4, 5 losses, I'm calm with it. I'm okay with it because I believe on my strategy. I believe on my edge. And unfortunately, it's so sad that everything that you guys are learning from the social medias, they are made in a way that they make you believe that you can always win. Unfortunately, that's not the reality because trading is everything apart from winning always. Like trading is always about losing, break even, and frustration, all this kind of stuff. And it's very rare that you actually get consistent winning trades. However, the most beautiful things about gaining when you get the winning trade is that here you got 4 losses, but all you needed was just one trade. You see, that's what I'm talking about. So it's not that, oh, you hit a stop loss and you'll be like, oh, I lost 6 trade. And now if I do one-to-one risk to reward, I'm going to be losing everything. And who knows what I'm going to be recovering. If that was the case, then of course I would have understood your point of view. And it would be like, maybe, that's very tough. But thanks to what we know, the way we deal with it, we have to accept the fact that losing like this, I'm not saying it's normal. Absolutely not. Definitely no. I'm not inviting you guys to say, oh, jump on the chart and get 4 or 5 losses in a row. Because I know so many people that are like, oh, I take only 2 losses a day. I take 3 losses a day and that's it, I'm done. Which is okay, which is beautiful. There's nothing wrong with it. Because by doing so, you're building certain habits and certain disciplines with yourself in order for you to make sure that you're doing the right thing. However, when you truly know the technical side, your edge, and you truly believe on yourself based on the things that you learn, you study, and you develop throughout the years, I don't see anything wrong taking the next trade because literally the next TP is just in the corner. At least that's why I believe and why I see. But obviously, you guys have to understand that in order for you to do that, you have to be very strong. I'm not saying psychologically, but you have to be, you have to be able to face the reality and be calm with it. You have to be feeling like inner peace in order for you to keep executing your trade flawlessly. Because if you don't do that, then what's going to happen? Your emotion is going to start jumping and then you're going to stop messing around. So I hope through this video and through the example that I shared with you guys, I've been able to, give you some value and some importance and some help on understanding why it is crucial to following this rule of sticking to your strategy and your own approach and analysis, because you guys can see clearly based on what I just showed you that it literally works. Okay, so I highly encourage you and suggest you to take your strategy, open any graph, any chart. Obviously better if you do the major pairs, and try to backtest as much as you can. And not, I'm saying backtest for like 10, 5, 20 trades. No, take at least 100 to 200 trades, all right? And then start pulling out data and start understanding what works best for you. Like, for example, now I said here that, yeah, price broke the structure, I'm following the order flow. But do I need to take all of this, right? Like, is it the right point for me to go with the order flow? You see where I'm going with this? So you have to be obviously able to filtrate all the trades that you're taking in order for you to know which one are the best one for you, which one are the one that's suitable for you. That's it. That's all you gotta do. So yeah, this being said, guys, I hope you enjoyed the video. If yes, please subscribe and like and share the video. And I'll definitely bring the market outlook this Sunday as well, because my second outlook again was crazy, guys. Even this week we had some amazing trades, so I cannot wait to share with you all and to go through that together, to see, you know, what are the opportunities that we had this week and how we could have taken something even better. And then that's it. That's all for today. So